In the morning, we are going to lunch very soon. And just a recap of what's happening in the market at the end of last Friday activity. We saw that basically the equity markets in the States have basically retreated on the back of a less than ideal non-farm payroll report. Market was expecting to see more job destruction. What we came up with was actually an increase in job creation from about 250,000 new jobs created, which was what the market expected. It came up 263,000 new jobs created. And the unemployment rate dipped back to 3.5% from 3.7. Remember 2 months back, the number was 3.5. It bumped up to 3.7 and the market was like, okay, the Federal Reserve rate hike seems to be working. But now with the latest job numbers coming in, and we saw that the jobless rate has not actually gone back. Okay, it has gone back down to 3.5%, which is a good number. By any standard, when you see more people are being employed, that means the economy is basically quite strong. There is no ill effect from the aggressive rate hike. That means now analysts are saying, oh, in such an event, that means the Federal Reserve rate hike is likely to continue to be more aggressive. Maybe when the FOMC meets again in November of next month, or on the 1st and 2nd of November, which is the next scheduled FOMC meeting, then the Federal Reserve is likely to maintain its very aggressive rate hike to the point whereby they may adjust interest rate higher to 75 basis point, or maybe even 1 whole percentage point, or maybe it's 100 basis point. So that causes the equity markets to retreat from Monday, Tuesday's rally. Monday, Tuesday rally was actually a relief rally because England has actually, or rather UK has actually reversed their policy of cutting taxes. So the market received that news with jubilation. So remember just the week before, at the end of September, we saw the market actually basically falling apart when UK announces the tax cut. And now that over the weekend they reversed the policy, the market actually unwind those short positions, causing the market to actually spurt up. As far as the Dow Jones is concerned, it went up to as high as 30,454 from a low of 28,725. So that's a big move. But by midweek, we are already seeing that the very strong reversal now is unraveling. There's a very good chance that going forward this week, we may see the Dow Jones actually taking out the year's low at 28,725. The big news or the big catalyst for this move is still the same. Remember when UK announced the tax cut, what caused with that policy, 3 major asset classes actually was unraveling rapidly. First was, of course, the UK equity markets. Okay, the FTSE was sold off aggressively because they had the mid-margin call. They were selling any assets that still have any kind of value. And that also spilled over to the British pound. The British pound was basically sold off all the way to a 37-year low. In fact, it is a record low so far as far as we know, close to 103, which is we have never seen before. And market talk is that it will eventually go to parity with the dollar. And the other asset class that was hammered because of the tax cut fiscal policy was also the gilt market. We're talking about the bond market in the UK that basically came unstuck because a lot of pension funds were so distressed. They were receiving margin calls and they have to dump all kind of assets, including bonds, and that caused the market to actually unravel. And there was worry that it will cause a contagion effect, and the Bank of England came in to support the market with at the same time, they were unwinding the quantitative tightening, and they are saying that I'm going to buy gilt in the UK market, practically unlimited, and that stabilizes the market. But the same fundamental that caused all these assets to come off, we're talking about equity markets, we're talking about currencies market, we're talking about anything other than dollar, and of course the bond market itself, the debt market is the damage has been done. So what we are worried is that over in Europe, the European bond market right now is so stressed, okay, whereby I think the wave of margin call is going to come in, and it may hit the market this week. So if that being the background scenario, then we want to be aware that this could take equity prices a lot lower. It will cause a spike in the dollar, and it will also cause the bond market to cradle. So that being the case, going forward this week, there is a very real risk that we can see a very massive move in equity markets purely because the bond market imploded, okay, in Europe. So if this is the case, I think there's a very real risk the market can actually go much lower. If you look at the daily time frame for the Dow Jones, my target for this move right now is at 27,000 to 25,000. Now this is the bracket of price I think the market will go down to. We could see a very fast moving market this week. Once the market hit 27,000, be very careful. Try not to sell and chase the market below 27,000 because this is the area between 27,000 to 25,000. I think this is an area in which they are building up to be a bear trap. This area becomes, if the market becomes too pessimistic on one side, there is this lopsidedness in the market. The market is too short. It doesn't take a lot for hedge funds to actually get caught in this massive sell-off. So as retail investors, we need to know that if the whole world is selling, then who is buying? Okay, at the end of the day, the market will have to subside, and there is a real risk that the market can do an about turn for whatever reason. Okay, so anything below 27,000 to 25,000, just be aware that this is a danger zone. Do not try to sell into this zone. Right now the market is at just above 29,000, which I think is still fairly reasonable to sell. If we get a marginal rebound, so much better. If it's not, then I think we can start building, or rather I will start building short positions going forward in anticipation for a implosion of the European debt market. The Nasdaq Composite itself is also, sorry, this is the Nasdaq 100, is also looking pretty soft. The low traded was just below 11,000 at 10,966, which was traded at the last day of September, and this level looks like it's totally untenable. It looks like it will be taken out very shortly. Maybe tonight it will be taken out, but definitely at the latest by this week. And if that's the case, my target is for a move down all the way to 8,000, maybe to as low as 6,005. So this area itself, again, very similar. At the current moment, a break here will cause a lot of program selling, and the market will definitely be looking towards much lower prices. Will the market break 10,000? I think there's a very high likelihood that it will break 10,000 in the Nasdaq 100. My target is at 8,000 at a bare minimum. And again, this is the area in which I think is very highly dangerous. Anything below 8,000 to 6,005, stop selling and wait for a signal that the market may actually do an about turn. The catalyst for the upturn, I do not know. We will have to see what caused the market to do an about turn. Possibly, if we could see a concerted effort by central banks to come in to support the bond market, then that could actually cause a reversal. But I'm just speculating here, okay? Now, in Asia itself, we can see that Hang Seng this morning is coming down. It opens with a gap down and has been trading lower. It looks like it will challenge the year low at 16,906, and this level looks like also it will be taken out. If that's the case, I think there's a very good chance it will go much lower. Again, 15,000 is going to be calling, okay? It may not even stop there for all I know. As far as China is concerned, they just reopened the market after a 1 week long golden holiday. Now the market is back in again. They are now trading. This morning, we can see that the Hang Seng Composite Index actually was still sliding, and now is in the area of 3,000, barely holding the line. So far, the move down from 3,424 is unfolding in a three-wave corrective pattern. And technically, in the absence of other catalysts, if we look at Shanghai Composite alone, as a standalone, it looks like this is a good level to go in to buy because so far it's corrective in nature, and there's every likelihood that the market will resume its uptrend. Okay, but when we look at the global picture and the risk of a debt market implosion, this doesn't look like a good bet here. So for the time being, I'm not involved in, I'm not active in this index here. I don't trade it per se, but I do track it. But if the 3,000 levels cannot hold, especially the 2,957 breaks, it will confirm that the market is heading much lower. Okay, Nikkei is off today because the Japanese market is closed today for a sports day holiday. Now in Japan, there has a lot of very weird public holiday. Today is one of them called Sports Day. So there is no update for the market is not open. So there is no update for the Nikkei. But basically, if the rest of the market is falling apart, then maybe you will see a major reversal for 27,400 levels, which we saw last Thursday. Okay. Over in the currency market, the dollar yen looks like it's about to challenge the 146, and a break of 149, 145.19 looks almost imminent. And I think because the Japanese market is closed today, if they want to break the 146, today is as good as any other day, because the Bank of Japan is not watching, is not operating. So maybe this is a good day to actually break the high of 149, 145.90. Will the BOJ come in again soon? I seriously doubt, because after the massive amount of intervention they did 2 weeks ago, we can see that they only affect the dollar yen rate for only 1 hours period, and prices are back to where it was before the intervention. So obviously it is ineffective because they were done unilaterally. For a intervention to be more effective, it will be best to get all the other central banks involved to do a concerted intervention. So far, this is not the case the last time they intervened. So my speculation is that prices may actually rally all the way to 160 before we see any serious connotation that the Bank of Japan will come in to intervene. Incidentally, 160.40 was a high traded in April of 1990. So that is a chart point, and because 160 is a round number, it's a lot easier to understand why they will want to come in to intervene at 160 levels. So do watch out as the market races towards a 160 high, okay? Sterling itself, the rebound recently we saw at the beginning of this month at 103.35, okay, 103.55, sorry, 103.55 all the way to 114.95. This is a huge rebound. It's actually a relief rally to correct in line with the U-turn in the policy of the rate of the tax cut implemented by the UK Chancellor of the Exchequer. Okay, so the market has a rebound because of the policy U-turn. The market took it very well and take the sterling back up to 1.1495. And so far since then, it has been slowly been pulling back. Structurally, technically, I get a feeling that this rally here is not over. Okay, but I would not dare to go and buy this thing yet, because if my understanding of the debt market in Europe likely to implode, then it will again come back to the end of September, that big move sell-off that we see in both the equity market, in the currency market, as well as in the gilt market, which is the bond market. So if this is the background, which I believe may actually unfold this week, because after that sell-off towards the end of September, bond market in Europe is so stressed, and a lot of all these pension funds are actually under a lot of risk of having to meet margin call. So if that is the case, they will unload any good asset they still have in your books just to raise fund. Okay, so that may cause the sterling to come off again. That means to say, if that is a scenario, the dollar is going to fly. Okay, so in under such a consideration, maybe buying other currencies other than the dollar is not the brightest of move. Okay, but technically speaking, it looks like there may be one more push higher to maybe 120. But again, we will have to see how the market reacts if and when the debt market implosion actually occur. Okay, it's just my speculation here. Now, when you look at the euro versus the dollar, you can see that the euro has actually pulled back a lot deeper than the sterling itself, from just under $1. Okay, now market right now is trading at 97 cents, 97.5 cents, and it is right now more than 50% of the pullback from 0.9535 to all the way to $1. So maybe this round the euro will be taking the lead. So we will take our cue from the euro versus the dollar to decide whether there is going to be a massive sell-off, because like I said, this sell-off is likely to be triggered in the EU, because the debt market there is so stressed, especially the Italian debt market. Okay, so because the disparity between the Italian bond yield and the German bond yield is widening, and that may cause a dislocation. As far as energy is concerned, okay, energy is having its day in the sun after OPEC Plus actually announced a production cut of 2 million dollars, 2 million barrels per day. That caused the crude oil market to jump from $88 all the way to $83, $93. Unfortunately, I was too cheeky. I actually was holding a very nice long position below $77, and I thought that maybe there will be a temporary pullback so I can reposition, I take profit and reposition again on the long side. But the market doesn't seem to give me the chance. The market continued to rally up above $90. So I'm out. Okay, I'm looking for levels to get back in again. I think long term the oil market is likely to see even higher prices. So much so that $100 per barrel is going to be the new norm. So that being the case, I think I must look for opportunity on any pullback. This morning we see some pullback in the electronic trading hours. So hopefully this pullback can last for a little while longer to give me a price ideally below $90 to try to go in on the long side to reposition my long position so that I can see a next rally up. Okay, so until then that happens, we will have to watch. In the gold market itself, you can see the spot gold is also pulling back after a high of 1,729.5. We can see that this gold market is also moving in tandem with the energy markets. So there's a very good likelihood, if that is the correlation, then maybe going long precious metal is going to be also a good consideration. Ideally, the market can slide back to $1,677. The area I think will be becoming to be attractive, and if I see a reversal signal on the lower time frame, maybe I'll take my chance and put my stop just below the 1,614. Okay. Over in the silver market, we are seeing the same thing. We're having a three-wave rally from $17.56 to $21.24, but that move is now seeing a pullback, and ideally this market do not go straight down. It will allows me to stabilize a bit. If it stabilizes a little bit, maybe around the $19 level, I think there will be a great level to consider picking up some long position on the basis whereby on the lower time frame I see a reversal signal. Okay, that will be my game plan. Over in the cryptocurrency markets, you can see the market is basically quite flat. Okay, there's hardly any activity, although the market has been ding-donging, but by and large, you can see the market is consolidating. There is no fundamental, there's no driver that is currently exciting the market. Okay, so we can see the market is actually quite flattish. Okay, very flat. After a rally to 20,469, the Bitcoin has been slowly losing ground. Now it's trading under the 20,000 barrel. Like I said, 20,000 is no longer a key psychological level. It has gone up and come back down many times to be of any significant right now, and the lowest it traded over the weekend was 19,259, and looks like the market may actually drift a little bit. When we consider where the range has been, 18,461 to 20,469, the market right now is smack right in between these two price point here. So it can go either way. So that means to say that there is no advantage in either going long or going short. After all, there's no driver to excite this market. So maybe what I'll do is I'll just watch. I'm not intending to take up any position in the crypto space for now, because there is simply not where the money is right now. For Ethereum, we are seeing basically the same thing. The market was trading at $1,253.40 all the way to $1,383.70. Right now, the market is smack in between at $1,322.70 and thereabout. Again, smack in the between the two extreme price points. Again, no driver. Ethereum, however, has driver. The Ripple has gone up rather steadily. Obviously, I think the market has been buying Ethereum purely on the basis whereby the lawsuit between the SEC, which is the Security Commission, and Ripple Lab, the company behind the Ripple coin, is now that lawsuit is coming to a head very soon, in about maybe less than slightly over a week's time, on October the 18th. A lot of analysts will say that the result, a verdict will be given, and analyst is thinking that Ripple Lab may actually win this case. The whole idea of this case was that when Ripple was launched in the United States and sold to American investors, they sold it like a non-security. Okay. However, the SEC believes that the nature of their offering is more can be categorized as being doing a security offering, of which you need a license. Okay, so this is the basis of the litigation where the SEC thinks that the Ripple coin should be classified as a security, and Ripple Labs saying that it is not. Okay, so you cannot retrospectively say that it was a security. After all, the Ripple coin has been around for quite some time now. Why now do you decide that it is going to be classified as a security? So analysts is thinking that this backward looking kind of litigation, there's a very good chance Ripple Lab may actually win the case, and that is definitely good for the price. So this is the only thing that's people are watching right now as far as the crypto space is concerned. I mean, we're talking about the traditional the regular coins, not talking about the minor altcoins that some of us don't even get to hear about. Okay, so based on this alone, I think the sentiment for Ripple is pretty strong, but there's a danger. Okay, once the verdict comes out, whether in its favor or not in Ripple's favor, I think there's a very good chance this thing will unwind. Okay, there is this thing called buy the rumor, sell the fact. When the verdict comes out and Ripple actually win the case, there's no longer any reason to hold on to a long position in Ripple. That may cause Ripple prices to come back down. Worst case, if they lost the case, okay, Ripple is building up to be sold. Either way, I think as we get closer to October 19, maybe the odds will shift to the sell side of this market. So just be very careful chasing the Ripple coin, because you can see relative to the other coins where all the other coins are simply treading water, and they are not having any major move up or down. And if Ripple is the only one that goes up consistently, it is screaming to be sold. So just be very careful about this up move here. Okay, just as the date gets closer, remember the date is likely to be October 18, and this is about 8 days from now. So do watch out for this move. Okay, for the other coins, we can see it's very similar to what we have seen in Ripple, in Bitcoin and Ethereum. Basically, the market is just treading water. The low for this Cardano is at 41 cents and 43 cents. The market right now is at 42 cents. So basically it's stuck right in the middle, not knowing which way to go. For Solana, we can say that it's another similar story, $31.74 to $34.50. Market right now is $33. So again, it's stuck right in the middle. No incentive to either go long or go short as far as I'm concerned. So for a time being, maybe I will leave this space for a while. I will monitor the price action, but not necessarily I will be taking up any active position, either long or short. Okay, so for today, I think that's all I will do, and I will see you again tomorrow morning. Bye-bye.